In this video, we will examine the form and function of the legendary Bollinger Bands indicator. To do so, we will teach you background, strategic applications, how to set it up on TradingView and MetaTrader 4, as well as how to incorporate Bollinger Bands into your very own trading strategy. At their core, Bollinger Bands are an indicator designed to measure the elasticity of price. The simplest way to think of Bollinger Bands is to imagine an envelope that contains price action. This envelope is made up of three lines: an upper band, a lower band, and a midpoint. Now, Bollinger Bands are utilized as a chart overlay, meaning that they are placed directly on top of price action. It's in this way that we can use the bands to quickly determine if a market is trending and directional or consolidating and flat. That's the primary function of Bollinger Bands, to identify market conditions by measuring pricing elasticity. Are you confused? Well, don't be. Later in this video, we will deconstruct the indicator and show you exactly how to use it in the live market. Bollinger Bands were developed in the early 1980s by market technician John Bollinger. In his famous book, Bollinger on Bollinger Bands, they were introduced to the public. According to Bollinger's official website, the indicator was developed out of the belief that pricing volatility was dynamic, not static. Bollinger sought to prove this assertion by relating evolving price action to a normal value. At the time, this represented a major shift in pricing theory. Bollinger found that by comparing price action on an ongoing basis to an arithmetic mean, it was possible to establish whether a price point was currently high or low. It is this idea that pricing volatility is dynamic in nature that makes Bollinger Bands such a valuable and versatile technical device. Before we dive into the form and function of Bollinger Bands, it's important to understand the indicator's purpose. Bollinger Bands are designed to illustrate price volatility. This is done by comparing a price point to a mean value. If contained inside of the upper and lower bands, the envelope, then volatility is deemed normal. If price falls outside of the envelope, it is relatively high or low. That's all Bollinger Bands do. They quantify pricing elasticity and determine if asset prices are high or low. We'll go into more detail on how to profit from this information shortly. So how is the Bollinger Band envelope built? 4 key inputs define the size and scope of the bands: the period, the moving average, the standard deviation, and the data set. It's with these 4 inputs that pricing elasticity measure is constructed. Let's take a closer look at each one of these inputs. The first input is the period. The period is the number of increments of price bars included in the study. John Bollinger set the default period for his bands at 20, but it may be adapted to any value. The variable periodicity gives traders the ability to tailor the indicator to be as broad or as focused as desired. Generally speaking, longer periods represent more aggregated studies. Shorter periods are viewed as being more sensitive to current price action. Now, it helps to think of the period as the study's length. It determines how far back in time we are going to go to derive our moving average in upper and lower bands. Secondly, we must assign a moving average type to our Bollinger Bands. Now, there are many types of moving averages, including exponential, smooth, and simple. Be sure to reference our indicators video on moving averages to learn more. Now, the moving average is the basis for a Bollinger Band envelope. It is the relative value on which the upper and lower bands are based. It is plotted in the center of the envelope. Now, due to its location, it is often referred to as the Bollinger Band midpoint. Now, each type of moving average views price action in a different way. For instance, exponential moving averages place a greater weight on recent price action, while simple moving averages value past and present price movements the same. This can profoundly affect the construction of the pricing envelope, as each moving average value will be different. In turn, the upper and lower band locations will be impacted. Standard deviation is a statistical device that measures data dispersion relative to a mean value. A standard deviation calculation tells us exactly how normal or abnormal an occurrence is when compared to an accepted mean. It is represented in decimal form. Low standard deviations suggest that data is clustered around that mean value. High standard deviations suggest data points are spread out farther from the mean. Now, for Bollinger Bands, the upper and lower bands are functions of standard deviation. Once we assign a standard deviation value, our upper and lower bands are plotted as a representation of the projected variance from the average value. Once again, standard deviation is a variable, and the user is free to select a desirable value. Now, as a general rule, the lower the standard deviation, the tighter the Bollinger Bands. So bands with a 3.0 standard deviation will be much wider than those assigned a 1.9 value. In the live market, a 2.0 standard deviation setting is the most popular. To conduct any study, we must have a data set. In the case of Bollinger Bands, the data set is the price point that acts as the basis for the moving average calculation. This is a vital part of the Bollinger Band indicator. In essence, it is the foundation on which the entire study is built. There are many data sets that one can choose from. The diversity of options depends on which are supported by your trading platform. A few of the most commonly found are basic price bar information: high, low, open, close, or mid. Let's cover this now by building a set of Bollinger Bands from scratch on MT4 and TradingView. All right, this is a look at the MetaTrader 4 MT4 platform. This has been the industry standard for a long time, not necessarily so any longer, but chances are if you've placed a Forex or an OTC trade over the past decade, you've probably used MT4 or at least heard about it. So as you can see, we've got a chart layout here. Our Bollinger Bands are going to be placed right over prices, a chart overlay on the same window. You'll notice this is a US dollar, Canadian dollar daily chart, and let's just sort of show where to find this Bollinger Band indicator. You'll notice we've got our symbols list here, and then right here we have a navigator, our little navigator balloon, a navigator box. Underneath indicators, we're going to expand that indicators list out. We're going to have a trend, a little division called trend. We're going to expand the trend, subdivision out, and then we're going to have Bollinger Bands. We're going to give those a double click. You'll notice our window pops up, and these are our inputs. We just went over our inputs. So we have periods, standard deviations, and also our data points. So here, period is 20. That's John Bollinger's default setting. We'll go with a period of 20. We'll go with 2 standard deviations, which is also typically a default setting, and we'll apply to, let's say we want to apply this to the close, and that would be our data point. So something like this gives us an opportunity to add these Bollinger Bands as just a chart overlay. You'll see they pop up with automated functionality, so no fuss, no muss. It's very quick and easy to use. So that's how you place the Bollinger Bands on the pricing chart in MT4. If you want to get rid of them for any reason, you right click, hit indicators list, go to Bollinger Bands, and hit delete, and you'll notice right there it takes them right off of your screen. So that's all there is to it from MT4. Let's transition over and let's take a look at how to build a Bollinger Band setup and apply those to a TradingView chart. Okay, this is a look at the TradingView platform, and what we have here is a 30-minute chart for the Euro US dollar. You'll see that applying the Bollinger Bands on TradingView is relatively straightforward, maybe a little bit simpler than on MT4. You'll notice we have an indicators icon right at the top of the screen. We click on indicators, we cursor down through our list of Bollinger Bands. We click on Bollinger Bands, and we've added the study to the chart. You'll notice right here we've got it laid out for a nice blue color for the upper and lower bands, and then your center band is denoted in red. Now what you can do to manipulate the settings on the Bollinger Bands on the TradingView platform is to go to your inputs. Now remember, we talked about these inputs. The first thing you'll see, time frame. Okay, that's going to be our chart. Our setting right there is our 30 minutes. Our length, that's our default setting of 20. And you'll notice maybe we want to set it something like 24. Our source, that would be our data set. We would be looking at something like a open, high, low, close. Maybe we want to do it for the mid, and also our standard deviation. Let's say we want to do a little bit bigger than the standard 2. And you'll notice those are our inputs. And then right there you hit click, and boom, and there's your Bollinger Bands. So TradingView, relatively straightforward to apply the indicator on the platform, and very, very straightforward. So now that we know what Bollinger Bands are, the necessary inputs, and how to build them on your platform, it's time to apply what we've learned in the live market. One of the best things about Bollinger Bands is their versatility. They may be applied to any asset and traded on any time frame. Also, they are ideal for combining with other technical indicators. It's because of this inherent flexibility that Bollinger Bands may be used as either the basis for a unique trading strategy or as a strategic filter. In truth, there are many misconceptions that surround this powerful indicator. Among the largest is that Bollinger Bands are only good for trend trading. This simply is not the case. The true power of these bands is that they can help traders quickly identify market state. It's in this way that the indicator may be used as part of a trend, breakout, or range trading strategy. Let's take a look at a few of the rules and guidelines from John Bollinger himself. A great resource for getting more information on Bollinger Bands and learning more about their functionality and how to apply them in the live market with a little bit of nuance and integrate the full functionality of this indicator into your strategy while respecting what it's designed to do is to head on over to BollingerBands.com. I mean, get the information directly from the horse's mouth. I highly recommend visiting www.BollingerBands.com/Bollinger Band rules and get a good idea of how to qualify what these bands do and how to apply them to price action. action. Now, John Bollinger has put down about 17 of his biggest rules that he's found over the years, actually 22 of his biggest rules that he's found over the years. We're going to cover a few right now, and I'm just going to highlight a few of the more important rules. And why not start with number one? Bollinger Bands provide a relative definition of high and low. By definition, price is high at the upper band and low at the lower band. That's all there is to it. So remember, when we're at the upper band, prices are elevated according to the mean. When we're at the lower band, they're low with respect to that mean value. Now, we go down through the list, and there's all sorts of good nuggets of information here. Appropriate indicators can be derived from momentum, volume, sentiment, open interest, intermarket data, etc. He talks about different ways that different indicators can complement the Bollinger Bands and really boost their efficacy. It's interesting because there's some good stuff out here. For instance, number 8 is one of my favorites. Closes outside the Bollinger Bands are initially continuation signals, not reversal signals. And this has been the basis for many successful volatility breakout systems. We've put out a few ideas like that in the past where you get that hard close outside of a Bollinger Band, and immediately, intuitively, we say, okay, well, we're at a relative high level. Price is due to retrace. Well, not necessarily. Sometimes that's the beginning of a real strong breakout or trend. So I really fancy number 8. I think that's an incredibly useful one. You'll notice the default parameters we've just talked about, the default parameters of 20 periods. Also, there's a real great one here. Traditional Bollinger Bands are based on a simple moving average, but exponential Bollinger Bands are incredibly useful. They eliminate sudden changes in the width of the bands. So there is a wealth of information right here, and John Bollinger sort of puts it in very succinct fashion, and it really, there isn't much here for interpretation. These are rules that you can apply to the Bollinger Bands if in fact you want to integrate them into your trading strategy. So it's fascinating stuff. It's absolutely great. Really just good tips for refining the efficacy and the usefulness of the indicator itself. So let's head back over to the pricing charts and examine how Bollinger Bands function in a collection of real-world scenarios. One of the best things about Bollinger Bands is their versatility. Now, you can place Bollinger Bands on any market, on any time frame, and you can trade darn near any market condition on those markets and time frames. So it really is up to you what you put Bollinger Bands on. For the purposes of our conversation here, we're going to talk about 2 basic strategies. The first one's a breakout strategy, and the second one is a rotational strategy. Now, when we're trading breakouts, if you remember one of those rules, rule number 8, I believe, from Bollinger's website, he says that, listen, sometimes when we see a close outside of the Bollingers, it doesn't necessarily mean that we're getting ready for a reversal. It's quite the contrary. And that's the concept behind our breakout strategy. So let's just build a nice, quick Bollinger Band sequence here. We're going to go right to our Bollinger Bands here on TradingView, and we just put them up using our default settings. Bollinger Band, a period of 20, standard deviation of 2.0. Now, if we're looking for a breakout strategy, according to rule number 8, we're really looking for the type of market that's directional. Now, you'll see right here, we have a calm, real quiet type market conditions, and then you get a big breakout here in this 30-minute Euro USD. And you'll see right there, that's on the UK Open. Boom, we get that big rotation down, and we notice that we've got a 30-minute bar that closes outside of that lower Bollinger Band. Now, remember what that rule said up from the website. Bollinger said, listen, this is not a reversal indicator. Yes, price is extremely low compared to our relative norm, our midpoint, our average, but oftentimes this is the precursor for a larger breakout. And you can see historically, that's exactly what happened here. We got the big move on the 30-minute. We got a close outside of the lower Bollinger Band. And instead of buying the market thinking, well, we're going to get back inside of the bands very quickly, according to that rule, to that filter, the idea here is no, we could be in for a continuation. So that would be the first way that you could trade these on sort of a breakout type of a scenario when we go from real calm market conditions to maybe a sudden break and a close outside of the band itself. In this case, it's a periodic close beneath the lower Bollinger Band. You'll notice we get a period of sideways trade for about an hour, 2 30-minute bars, and then we get another move. Now remember, any of these strategies, you have to couple it with proper risk management. You have to know where to locate your market entry, and you have to have a stop loss, and all those things go into a comprehensive trading plan, a comprehensive strategy. So using this concept, you can build those things. I encourage you to check out some of our modules that are coming your way, specifically the risk management module. We're going to cover how to build these trades and the concept of risk versus reward. So it might be a situation where you say, hey, this appeals to me. This is something I want to do. Well, this is only one part of it. This is the indicator. This could get you into a market on a breakout. You need to build the rest of the trade to make it a really strong, positive expectancy strategy, not just a trade. So, and lastly, what I'll say about the breakouts is you have to beware. When the market flattens out like this, we need to transition to our other mode of thought, which is rotational strategies, or else these fake breakouts can really be extremely costly. So the second pair we're going to look at here, and the second strategy number 2, and this is a rotational strategy. What we have here is a 30-minute chart on the Great Britain pound US dollar. Let's go ahead. By now we know how to put our Bollinger Bands on. We just dial up our indicator list. We go to our Bollinger Bands, and while automatically placed on our charts as an overlay. Now, what do we have? What do we want to do? Remember, Bollinger Bands give us a great idea of market state. And if you take a look at what we have here, we have a nice directional move. We had sort of a similar to that Euro USD chart we just looked at. You had a nice big directional move and actually a downtrend. Well, look at what we have here. The Bollinger Bands are wide open, suggesting that envelope is much bigger. That pricing elasticity is enhanced. And in this situation, it turned into a nice bearish move. But if we want to trade rotational markets, we're looking for flat price action. We're looking for a small distance between our upper and lower Bollinger Band, and we're looking for really a very reduced minimal slope, if not parallel bands, that give us an opportunity to trade those rotational type of a strategy. So as we're looking at price action here, just to go back a little ways and see if we can find a rotational market on this Great Britain pound USD. You'll see right here, you've got a nice, really nice, good ebb and flow, I would say, to price. And then look at where we're at here. Well, now this is a little bit bigger than what we wanted to look at, but it's not necessarily a bad situation to play rotation. What do you have here? You have a series of highs. You got something like this, which almost is a rectangle formation, if you remember that from the chart patterns tutorial. If it's a bilateral formation, which it really sort of is, we're moving sideways, and that's exactly what we want to trade rotation. So how would we execute a rotational trade using Bollingers? Very simple. You'd be looking to sell the vicinity of the upper Bollinger Band and buy the vicinity of the lower Bollinger Band. It really is as simple as that. So you have a situation here where you're moving sideways. Those bands are coming together. You'll notice this big directional move may have prompted a short trade right here. We would have got stopped out, but when you come back around, you've got a nice buy here. When this rotates down to the bottom of your Bollinger Bands, you got a nice buy from your lower Bollinger Band. You could have sold from the upper proximity, and you also could have sold here once or twice more. So there's a few trades in here that are fairly rock solid. Now, once again, the idea behind a rotational strategy or reversion to the mean strategy is you're going to sell that upper extreme and buy the lower extreme. Profit target's going to be somewhere in the center, so that will be towards our moving average value. Now, in order to place a stop loss, once again, that'll either be a function of basic risk versus reward ratios, or we'll have a big round number, or we'll just be looking at the distance between the midpoint and the upper or the lower the upper or lower Bollinger Band, and that'll be how much we risk, perhaps on a 1-to-1, a 1-to-2, or a 1-to-3 ratio. So that's what we're talking about. Remember, no strategy is complete without a firm money management plan and firm risk management plan. Those are concepts we're going to take a deep dive into a little bit down the line in the academy, so be sure to check those modules out before you incorporate Bollinger Bands into your own trading strategy. But those are two ways that these bands are incredibly powerful. The first thing they do is they tell you market state. That gives us the ability to perhaps trade a breakout or trade a flat market and cash in on that price action, really built from our real strong envelope. So that's a pretty good look at how to apply these in the real world. If you feel like there's something that you may want to incorporate into your strategy, feel free to do so. Just remember, you got to incorporate risk and reward and money management as well. Bollinger Bands are a way of measuring the pricing volatility of an asset. By comparing price points to a mean value, they furnish traders with a dynamic view of volatility with respect to relative high and low values. It's in this way that traders can use Bollingers as a trend, rotational, or breakout indicator. Now, getting up and running with Bollinger Bands is simple. All you have to do is locate the indicator on your platform and assign the basic inputs. Upon doing so, your customized envelope will be added to your charts as an overlay. Then, you're ready to interpret the values and apply any strategy you deem fit.